Well, hi everyone, Sean Humphreys here. Welcome to All Things Retirement. In this installment, we're going to talk about one strategy that if you apply it, virtually guarantees that you're going to make more progress financially than most people and have far more confidence about your financial planning and your retirement planning. Now, if you're new to this channel, make sure you hit the subscribe button. We're posting content all the time on various aspects of retirement planning, drawing on my over 30 years of experience helping clients prepare for retirement and transition into retirement successfully. So if you don't want to miss the content, make sure you hit the subscribe button and the alert bell. Okay, so what is that one strategy? Well, it's a very simple strategy. Believe it or not, it's the strategy of having coaching, to value financial advice from a financial coach. Now, I know that sounds a little bit self-serving, given that's what I'm involved in as a professional, as a wealth planner and retirement planning coach and advisor. But I'm going to talk about why I think this is such an important area for all of us to pay attention to. I'm going to draw on research in this area. I'm going to talk about some examples of what a coach should do in the area of financial planning, so you have a pretty good sense as to what you should be looking for. Now, before I get into some of the data and the research on the value of coaching, sometimes referred to as the advisor alpha, the additional value that advisors can provide, let me just give you a short kind of overview. And I think for most common sense people, this makes sense. So whenever you are embarking on something new and you've never done it before, it's the very first time that you've done, whether it's, played pickleball or learned tennis, a new sport, a new skill. Are you good at that skill the first time you do it? Of course not. You make mistakes, you go down, wrong turns, you take more time than it should because you're not conversant with the material. There's all kinds of inertia you're fighting through. Now compare that to somebody who's been working in an area for years and they've seen many, many different situations, dealt with many different circumstances and refined and honed their skills. So which process, which individual thinks will have a quicker time of it in terms of making progress? Obviously the person that's had more experience. And it astounds me that when it comes to the area of finances, that many people don't have a financial coach. But when you think about it at a common sense level, if you're dealing with somebody that's literally helped hundreds of families prepare and transition into retirement, do you think that individual and their teams learned a few things? Absolutely. Compare that to someone who's retiring, maybe will only retire once and is trying to muddle through that financial planning. Do you think there'll be mistakes? Probably there's a higher probability of mistakes along the way. So I think this slide really illustrates it. You've got the value of advice really stands between where you are and making the big mistake. The advisor, the financial coach, the retirement coach is there to help make sure that you consistently do the things you need to be doing to track in the right direction towards your goals and your objectives. And along the way, also to make sure that you don't make the big mistake. And I'll talk about in a few seconds what can cause that big mistake to happen. So at a very basic level, when you're dealing with a wealth advisor or retirement coach, and when we work with our clients, what the client's looking for is someone to understand their goals and objectives, to understand them and what's important to them about their money as an example. Number two, we want to make sure we take a look at their situation to identify any gaps between what they say is important to them, but impediments in terms of financial impediments and other issues that keep them from achieving their goals. The next step is to identify strategies and opportunities to make sure that the client can begin progressing in the direction of their goals, to then help the client implement those strategies, and then along the way provide accountability in coaching and encouragement and fine-tune and update the strategy to make sure the client's always tracking in the right direction. That's coaching. But just as important along the way, there'll be major issues and transitions that all people face throughout their financial lives and personal lives. And we want to make sure that we help that client family avoid big mistakes along the way. In a nutshell, really, that's coaching, and that's the value that coaching brings. If that is actually happening in the client's life, then undoubtedly there's going to be great value. Just talk about some of the key issues that get in the way of us making good financial decisions. There are some common things that derail us. So the first one we'll take a look at is the cycle of investing or emotion. There is often emotion around financial decisions, whether it's the loss of a job, It could be capital markets, economic turmoil, you name it. Those issues come into our lives, and we can go from oscillating from opportunity and excitement and thrill to disorientation, to despondency, capitulation. And so, one of the roles that an advisor and a coach, a money coach, plays is to help you navigate this cycle. It doesn't happen all the time, but there will be moments where most people can get pretty emotional around the either internal or external events happening in their lives at that time that have financial implications. So that's the first one, the cycle of investing, the emotion around investing, depending on circumstances surrounding it. Now, the next area is the importance of being respectful of transitions. We all will go through major transitions through our lives. Most people don't think about those transitions in advance of them happening. And so they get caught by surprise, or they don't take the transitions seriously. So as we go through our lives, there's an ending, there's a letting go, there's a neutral zone, which is navigating the new reality, and then embracing the new reality. But sometimes people don't navigate these transitions very well, and it creates knee-jerk decisions. It creates sometimes people being way too reactionary, or being surprised by the emotions or experiences that they go through. And that can create a negative loop in their lives that leads to bad financial decision making. So again, a financial coach helps people kind of navigate those areas. Now, you throw into that mix emotions. So often when we go through a stressful transition or stressful events, there's reduced cognition often. We feel anxious, and we're very reactive to the events surrounding us. And that's not a recipe for good decision making. So when you take a look at all those things and add to that the fact that we're just immersed in information, advertising, neighbors, the radio, the internet, our family, all the different influences that come at us. So as we're navigating emotion and external events and internal feelings and then conflicting advice that comes our way, it's not surprising at all that people struggle to make good financial decisions on average. So when you take all that together, it leads to some really negative outcomes. And I'm just going to show you one particular image that sort of underscores this. This is one that I've pulled out before, and it looks at the results of investors from 1992 to 2011. It's a very simple study done by the Investment Funds Institute of Canada. And they looked at the average stock fund return over that time period, and net to the investors, it did 8.2% as an industry average. And then they looked at investors, the average stock investor over that same time period, and they found that their returns were 3.5% net. And the reason for that difference in performance, they said, was the investor behavior penalty. In other words, people were making the wrong decisions, often influenced by the things I just went through, that was hurting their performance and not allowing them to make high probability financial decisions. Like I said, there's been a number of studies that have looked at the value of financial coaching. I'll just allude to one study. So this is a study that was done by Ipsos Reid, and this is back in 2010. And they just looked at one area of finances, and that was just financial assets. The study was released in July of 2010. And when Ipsos Reid did the research between advised households and non-advised households, after 4 to 6 years worth of advice, they found that advised households had almost 3 times the financial wealth that non-advised households had. After 7 to 14 years, it was almost 5 times the financial wealth. And if we go to almost 14 years, almost 7 times the financial wealth. Now again, not completely surprising. If you have a coaching relationship that's updating that, you're accountable to, they're giving you encouragement, they're fine-tuning the advice, they're helping with implementation, it shouldn't be surprising, particularly when you're dealing with someone who's done this before for other families. It's a far more efficient and productive and high probability exercise. Now, the other interesting thing about the studies that have been done is they've looked at financial attitudes, emotional attitudes. And I'm not going to go in this study in any detail. I'm just going to look at the chart. But the chart basically talks about, in the blue, how people who have advised households compare to non-advised in red. And the bottom line was that at every metric around the emotions of their finances, people felt more confident, they had a better outlook about their financial futures, and they felt like they were not going it alone. They weren't working in a vacuum, and they really appreciated the coaching, and emotionally had a very positive impact on them. And then the last piece of research is a summary statement from a report that was done. It was basically led by Vanguard US, one of the largest asset managers in the world. And they have an interesting perspective. They have a distribution channel that looks at direct investors through discount brokerage operations. So those are non-advised families. And then they have advised families where advisors are building portfolios using Vanguard's exchange-traded funds. So they have a perspective where they can look at the performance of advised households and non-advised households between those two channels. So they worked with other consultants to build some studies to look at performance over time. And the bottom line of the study was consistent with what I just showed you, is that performance by advised households was consistently better. But they went further and they said, well, what were the specific things, activities that coaches, retirement coaches, wealth coaches were doing to add that extra value for families? Well, the first thing they said was the value of coaching happens over time. It's not a straight line, X dollars of value every single year. It's a relationship that over time works with the client family as they go through the ups and downs, like I said, the vicissitudes of life that impact them financially. And then the coach is helping them navigate those things successfully so they're not making the big mistake and they're making the high probability decisions along the way. Now, I'm not going to go through this chart in detail. I'm going to key in on probably one area here, but they identified there's cost, but then there's value of the financial coaching. So they identify behavioral coaching, comprehensive wealth planning, asset allocation and rebalancing of portfolios, tax management, and deaccumulation strategies for the clients. That's where they found most of the value coming back to the client families. Now, if we just look at behavioral coaching, what they found was that one area alone was adding an additional 1.1 to 1.5% per year additional value on the client's balance sheet, not just their portfolio, but their overall wealth. And so if the client was paying 1% a year for the wealth planning and the coaching, they were getting back 1.1 to 1.5 on that one variable alone, not taking into account these other areas. And that makes sense. If the financial coach is helping clients, for instance, one small area, adding money back to the markets when there's value, maybe the markets have gone down, not capitulating when the markets have gone down, like selling out, but actually adding back in, making disciplined decisions. Probably two of the biggest benefits of coaching is accountability, to follow through, somebody asking the hard questions, trying to be objective and helping clients take action where they should, and also offering encouragement, and then updating that strategy on a regular basis. And then there'll be specific coaching moments as we navigate transitions. What can we do as we work with client families to help them make the high probability decisions, whether it's mom and dad struggling because they're getting older, whether it's the client navigating a retirement, whether it's financial issues with their kids. There's all kinds of things that come up along that journey. Another area for us is a portfolio deaccumulation strategy. A lot of clients, that was upwards of 0.7% a year, a lot of clients come to us because they're looking for guidance on pulling all the different pieces together around their retirement income plan. They find it quite confusing. We do that all the time. That's our wheelhouse. And so it's efficient, and clients get a very strong, clear direction on what they should be doing in terms of the retirement income planning. There's good value in that, not just the financial value, but the peace of mind value as well. Now, if you took all these areas, they said over time, it was adding 2.5 to 3.5% additional value on average over the years back to advised households. Very, very significant. So that's my overview on what is often referred to as advisor alpha, the additional value that advisors can bring to the family circumstances through coaching, behavioral coaching, good advice, helping clients navigate transitions successfully over a long period of time. Well, if you are new to the coaching world, or if you're in a situation where you're beginning to look for a coach yourself because you've got some very important decisions to make, and particularly for us, we help clients navigate the retirement transition, which is a huge one. Well, make sure you visit our website. We've got links to the website. We also have a link to our retirement planning resource page and a link to contact us if you want to start a conversation about exploring our coaching services in the area of retirement planning, we'd be delighted to have that conversation with you. So don't hesitate to visit those resources that are part of the description to this video. And as well, make sure that you hit the subscribe button and notification bell so you don't miss future content that we're uploading on a regular basis. You take care.